Hello, I'm Fiona Feely, Project and Relationship Manager at Miles. For almost 100 years, we've been privileged to provide first-class real estate services to property owners throughout Banyule and beyond. We hold ourselves to the highest standard in customer care and recognise our value extends far beyond assisting with buying, selling and managing your assets, but to provide support and informed knowledge in all aspects of our industry and how market conditions can impact our clients. While the media are often accused of catastrophizing conditions and driving customer fear as a result, we are noticing increasing consumer confidence and stability back in the marketplace. Consequently, we thought the timing was perfect to invite trusted and accoladed broker Dan Hustwaite, Principal from Macrofinance, to have a chat with us today regarding his observations of consumer behaviour and why he is feeling optimistic as we enter the second quarter of 2023. Welcome, Dan.
Hi Fiona, thanks so much for having me today.
Pleasure. Can you please start by sharing with us your background and experience in the world of brokering?
Yeah, for sure. So I've been a broker now for 19 years. I was working with ANZ Bank prior to that, and then I started Aqua Financial Services in 2011. We started off as quite a small business, and we've grown into a sizable team with the great support that we have from companies like Miles. We hold our own Australian credit licence, and we hold a full membership with the MFAA, which is the Mortgage and Finance Association of Australia, which we believe to be the industry's leading membership body.
Great. As mentioned, we're observing increased consumer confidence back in the marketplace again, with auction clearance rates ranging from 70 to 100%, depending on the weekend, and multiple bidders at auctions.
Yep.
Not something commonly seen towards the end of 2022. What are your observations here?
Well, very similar to yours, Fiona. So we're certainly starting to see a lot more inquiry come through, certainly over the last month or so, of customers looking to obtain pre-approvals to go out and purchase. Towards the end of last year, yes, the bulk of our work was definitely refinances. Why is this happening? I think we're starting to get very close to the peak of the interest rate hikes. Mm-hmm. You know, we've had a record 10 in a row. People have just paused a little bit, but getting close to the peak, and even we're starting to read and hear about interest rates potentially starting to reduce in early 2024. I just think there's a lot more confidence coming back into the market, and that's certainly reflecting on our business with the pre-approvals that we're building up for purchases.
Great. What are the biggest changes you've noticed in your business activity over the last few years as a result of global and national events?
Yeah, look, good question. I think the two prominent things that we've had to work through and navigate is clearly COVID. You know, it came as a big shock to everybody, certainly when it came to Australia. And in addition to that, there was the Banking Royal Commission. COVID being the first one I'll touch on, you know, there was a huge amount of uncertainty of what the industry would look like. You know, we would go and see all our customers face to face. We would sit in their lounge room, or we'd go and see them at the office, and obviously that wasn't permitted anymore. So we were sort of worried about how we were going to transact with our clients. But to the credit of the lenders and our aggregators who we're affiliated with, they enhanced the software massively. You know, so now customers, we can see them wherever they like, albeit on Zoom, Microsoft Teams, or any of those platforms. In addition to that, the banks have really enhanced their process. They've been able to implement electronic signing of documents and things like that, which has just made the whole process so much more seamless. In regards to touching on the Banking Royal Commission, look, that was another frightening phase in the home loan, investment loan, mortgage broking environment. However, all that it was really there to do was to ensure that customers were getting the best outcome for them when working with brokers and banks.
Yeah.
From a consumer perspective, it was purely to ensure that they were getting the right products at the right price for their needs.
Well, both Melbourne and Sydney are consistently globally recognised as two of the most livable cities in the world.
Yeah.
Melbourne is clearly more affordable of the two.
Yep.
We are noticing an influx of Sydney investors expanding their portfolio in Melbourne. Additionally, with the population expected to exceed that of Sydney by 2030, what are your observations here? And what would you advise Melbourne investors who may still be sitting on their hands, so to speak, regarding purchasing?
Yeah, good question. I think it's probably, it is a really good time, in my opinion, for investors sitting on their hands to look at purchasing. You might say that's an odd thing to say, given that money's become a lot more expensive because interest rates have steadily increased over the last 10 months. But because there is such a short supply of rental properties in Melbourne, the yields are starting to increase, which is going to offset some of those costs. Okay, you mentioned about the population growth. Now, if that continues and plays out the way that it's forecast, that will create even more demand.
Absolutely.
For investment, for investment properties or people looking for a property to live in, which will then inadvertently increase the yield further. So I think that it's a great opportunity right now to do it. In addition to that, investors might be a little bit concerned about coming off potentially fixed rates or, their loans becoming a little bit more expensive. But banks are quite aggressive in refinancing and offering cashbacks should you look to move, which will compensate for some of the costs, or we can even negotiate with your existing lender to ensure that they're offering you the best deal they can to retain your business.
Great.
And all these offsets will help assist cover some of the extra costs associated with the interest rate rises.
Yeah, makes sense. Thank you. You noted that every customer with a loan that is over 2 years old has the opportunity to get a more favourable rate elsewhere.
Yep.
That, coupled with the fact that they're being offered a cash incentive to do so,
Yeah.
it really feels like the ideal time to look at your finance and refinancing opportunities available to you.
Yeah.
Should they choose to contact you, Dan, can you please clarify what that process would entail?
Yeah, for sure. So firstly, yes, it is a great time to look at your options. Most banks are participating in some sort of cashback offer, some up to as much as $4,000. If you're refinancing your loan, you're probably looking at a cost of somewhere between $350 and $500 to leave your existing lender. So you're actually going to put money in your pocket, which you can use to put towards other things, increased compliance as a landlord, etc. From a timing perspective, we do need to do a loan application. Okay, so it's a matter of uploading some documentation like ID, pay slips, bank statements. Depending on the situation, the new lender may look to do a valuation on the property. That's completely free to the landlord anyway, or to the customer. But once the loan's approved, the documents can now be signed electronically. The two lenders will talk to each other and they'll lock in a settlement date.
Fantastic.
If you can't refinance for whatever particular reason, at very least, you need to be speaking to your existing lender. We can do that on your behalf, and it's something that we actually do annually for our clients anyway.
Great.
And it's just approaching them, showing them what other lenders are offering, and then just having them come back to you with an offer that's better than what you'll roll onto as a standard situation to ensure that you're getting the best deal you can with your existing lender.
Fantastic. Thank you so much for sharing your time, observations and expertise with us here today, Dan. We really value your experience and your expertise. We'd love to have you back to have another chat with us in a few months regarding your observations in consumer behaviour and what's happening in the market at the time.
Oh, I'd love to. Thank you so much for having me. It's been a privilege and look forward to chatting to you again soon. Thanks, Fiona.
Thank you. Please be sure to submit any inquiries via a link provided for an obligation-free health check and review of your current finance, or for new finance options. From us here at Miles, thank you for your time.